some rare good news on a Wednesday morning where Europe is suffering. Your numbers look good, Claire, and I just wonder for you where the growth is coming from next in this really tough environment.
Yes, we're pleased with our results today. It has been a difficult year, but we, I think, have demonstrated that we can respond in this kind of environment. We have 10.5 billion of inflows in the third quarter, and that delivers 17 billion of inflows for the year to date. So I think despite the environment, having a diversified business model and being able to offer solutions to our clients across those asset classes has been really important for us to deliver the result that we have today.
Claire, where's the money been going, and has it continued to come in through the first month of Q4? Trying to work out, I was in New York a couple of months ago and there was big talk about allocating to Europe, a lot of passive money coming through. I'm wondering if that's where it's come from, if it's continuing. What do you see, Claire?
Yeah, so we've seen inflows coming across all of our regions, across Europe, across the US, across Asia Pacific. That's been including and excluding cash. Obviously, cash is a strong feature of inflows this year. We've seen that this quarter, last quarter, and we see that coming into Q4 as well. But aside from that, if I look at excluding cash, we still have inflows coming across the passive space, across ETFs, across fixed income in the third quarter. The first couple of quarters of the year, active equity was contributing. And of course, the illiquid strategies in alternatives continue to be a strong feature in our inflow story as well. So really, across the board, obviously there's a mixed result there, but across the diversified asset classes, we are able to offer those solutions to clients. And I should say that ESG, of course, is a strong thematic there. So a third of our inflows across the year to date have been coming from ESG strategies, both in ETFs, in the passive space, but of course in other asset classes as well.
Claire, ESG, it's a good point. You've been really front and ahead for years on ESG, but for investors, it's no longer a nice to have. It's really a need to have now. How are you going to distinguish yourself in the ESG space going forward?
That's absolutely right. And I think what we've seen this year is that ESG is certainly an all-weather solution. And we have seen that demand being really accentuated this year. And as you rightly say, we've been responding to that mega trend for a long period of time, not just this year. And I think that's demonstrated in the product innovations and the new product launches that we have been bringing to market across our asset classes this year and indeed before. And if I look purely at the new product launches that we offer ESG equivalents for, then again, a third of those inflows from those product launches is coming from ESG thematics. We have just put in place a group sustainability office and a group sustainability officer. And across all of DWS, that office will be managing our entire strategy to respond to client needs and ensure our platform can be very agile in responding to what ESG needs to bring to all of our stakeholders now and in the future.
Claire, you also mentioned your ETF platform. You're the second biggest in Europe. The only other biggest one is BlackRock, but there's a lot of space between you two. Could you ever start to compete with them in terms of biggest in Europe? And can you do that organically, or are you going to have to go out there and buy another company for that?
Yes, so we're number two in the ETF space in Europe. That's in terms of our size of AUM. But I think importantly as well in terms of inflows this year. So if we look at who is collecting new money from inflows in the ETF space in Europe, we're second there as well. And I think that demonstrates the organic ability to grow, obviously to some degree. We've had 13 billion of inflows across 2 quarters in the ETF space. That's global. But I think having a really broad product suite, being able to respond to the product trends, enables you to grow organically to some degree. Certainly, there's a big space between those spots, but we're quite comfortable with the way that we're developing in the ESG space the ETF space in Europe.
Claire, are you actively looking for a dance partner at this point, at a time where there's some serious consolidation in your industry?
We always have an eye to what's going on, of course. We're always scanning the environment on the M&A space and what could be the right partner for us. And we think of that through the lens of distribution channels, through product channels, through platform channels. But I think as we've demonstrated this year, we've had to make sure that we are fit and healthy, that we're meeting our near-term targets, and we are meeting those targets a year ahead of schedule, that we're efficient and that we're resilient. That's been our focus this year, but we are indeed keeping a very close eye on what inorganic opportunities could look like in the future, and we will be turning our eye to growth and to transformation and the next phase of our evolution at DWS.
Claire, I imagine that public relations is very, very happy with that answer. I know you can't see me, but I am sitting here smiling. I'll follow up on the parent company, Deutsche Bank, or at least the majority owner. Are they supportive of you finding a dance partner? Have you had that conversation with them, Claire?
Well, I think our majority shareholder has been vocal as well in saying that they are, very supportive of DWS finding the best way to develop shareholder value, the best way to grow. I think they've been quite vocal in that regard as well. But we won't move into M&A for the sake of M&A. We will look at acquisitions or partnerships that are right for us, that can develop our shareholder value, that don't cause disruption, but really can help us on that journey forwards.